Yeah, Tom's here, of course, Tom Williams, Rita's here, and myself, Peter. So, we're starting a few minutes late, sorry about that, but here we are. So, over to Tom Williams. And what chart is this? It's 20 minutes of the S&P future. Would you like something else?
Right. Hi, everybody. Yeah, hi, everybody. It's Tom Williams here. Thank you, Peter. Thank you, Rita, for helping me. Now, the chart up. I thought I had this. You say it's a 20-minute chart? Right. And apparently the market closes early today for whatever it is in America. But, okay. Now, we've had a rally today, haven't we? Look, it's clearly gone up. You can see the way the trending system works, the blue bars, that the professionals were in charge as it went up. Right? Now, it's gone off slightly and sideways. Why? Because there it is. Markets do not like ultra-high volume. It is activity on up bars. After. Now, I say after there's been an up move, because that is a sure sign. Professional side of the so-called smart money. Don't forget, smart money are traders that will have 5,000-6,000 contracts going, and they often act as groups, and they will copy each other, and they need to unload their holdings at some time. Now, I don't know, there may be some good news or something, but they've marked it up, and they know how the herd behave, right? Many traders will see these up moves and say, well, I better get in on this before I miss out. And they get in, and then they sell. The professional money sell to them, right? And that counts for the very high volume or activity. Goes up, close off the high, look. And that's a sign of weakness. After. Now, I must emphasize this. You've seen a up move. All those blue bars, look. That's a simple trending system. Market goes sideways and it goes up, look, on no demand. Look at that low activity. Now, that is a very serious sign of weakness. You've got the high volume here, right? And then they hold the market up, but the market up, look, it's got some sort of signal there. Well, it has to be no demand. Has to be no demand. Well, seeing I wrote it all, well, it was re-edited by Philip Friston, who did a very good job. But that's no demand, look. And that's a sure sign of weakness. Now, although the market seems to be widespread up at the moment, it's highly unlikely to go higher than this area here. Now, the thing is, why did the market go up? I know that if you read my newsletter last week, we thought it would pop up, various reasons. But we look down now at the base here, and lo and behold, look, there's a very clear area of what we call accumulation. It's in all these time frames, right? We've got a down move, so you're vulnerable. Professional money move in. We know they moved in because there's high volume of down bar into fresh low ground, right? The computer agrees with that. What's it say, Pete? It says potential climactic action. Yeah, potential climactic action. That means that professional money have stepped in and buy. Read those dialog boxes, please. Right, so then we get an automatic little up move, fair enough. Right, there's not a lot of enthusiasm there. Now we are expecting, or you should always expect, before you put your money down, a test. So off, 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 bang. There's the test, look. It's color black because it's level bar. They've rammed it down at some time, look, only to close on the high. But the principle is so clear. it's been rammed down back into the level of this bar here, right, where we saw stopping volume or climactic action. And now, right, when we look down at the volume or activity, it's very low. So what that means? It means that now the supply that was present, which we can see here with this high volume and this activity here, has now disappeared, right? Because the volume is very low. They've rammed it down, closed on the high, look. And if the supply that was clearly over to the left here has now disappeared, the market, because the market works on supply and demand, if there's no supply, it means it's going to be bullish. And there it is, no supply. What's all that, Peter, coming up?
It says some problem with the audio. Can I get rid of it? Can you ask if everyone can hear you? Just to
Can everybody hear me? Type in Y. Rita?
Yes, they can.
Oh, good show. Okay, lovely. Yeah, I've got Rita there monitoring the screen just behind me slightly. And please type in any questions as usual, and we'll do our best to answer. But there's the accumulation base. There it is, very, very clear, look. If you ever see that, we've been seeing it quite frequently recently. You get the stopping volume, it goes up, arches over, comes back down. There's the test, look, very, very clear. They rammed it down, close on the high, and the volume is low. There's no supply at the level where previously there was. So that means the demand must be greater than supply. And that's what triggers the up move. It's as, you don't have to be particularly clever to see that, surely. Well, just trying to... Cursor stopped working.
There you go. Try that. No. Tab for some reason. Try again.
Oh, there it is. That's right. Okay, so, let's go back to that cause, look. There's the cause. Now, if you see a test in a rising market, that's also now, because you've got this behind you, very bullish. And lo and behold, there's a test, look. A red down bar, look. It's narrow, it's closed in the middle, and the volume is low, look. That is a test in a rising market. And that's confirming all of this straight away. Now, also I notice that I've told you this before, if in a bullish market, right, you see a red arrow appear. And there's two actually, well, there's one there, look. Right, if they test that, the very next bar, right, that means it's going up. Now, there's some discrepancy here. I think, we'll that red bar, that red signal is not supposed to be there, I can assure you. But it is a red down bar. And if you look at the other time frames, it's much clearer. But anyway, it's gone up, look. Blue bars, up, and bang. It's hit supply, look. Right? Now, the thing is, this market, they say, is going to close at 6. That's 15 minutes time. And we got this widespread up, look. Put the fear of God in you, look. However, look at that volume. It's not very high, is it? There's no way that market, they may possibly try for an up thrust seen this Friday. But it's weak, and you'd expect lower prices. Now, are there any particular questions about this chart before we look at another one?
Yes.
What's it, Rita?
Well, Alan says, would it be a good entry to go long after the test?
Yes.
But did they hear that? You might need to explain.
Right, read out the question.
Alan says, would it be a good entry point to go long after the test?
Well, yes, definitely. I mean, I keep telling you, I've told you many, many times over the months and years, that if you see a red arrow and then immediately afterwards you see a down bar, narrow spread, close the middle, the volume's less than the previous two, that's a very powerful sign that market wants to go up. Because the professional money have seen the weakness that caused the red arrow. Right, we may not notice it, but the computer has. And the professional money would have seen it, and they've tested the market. Now, I described the test in, was it last week's newsletter, Freezer?
Yes.
And you should read that and know exactly what a test is.
Steve says, you just said it's highly unlikely to go above that no demand bar. Now that it has done, do you think this is a sign of strength?
Well, I mean, have a look. Well, it's only gone slightly above. What I said was it's highly unlikely to go up through that no demand and that weakness there. Highly unlikely. And also, look at that volume there. There's not a lot of enthusiasm there for that activity, look. Although it's a widespread up, don't forget they're going to close in a minute. And what they would like to do, they like to fool you. So the newspapers, magazines, television companies, they will say, oh, the market's shot up, widespread up, look. It's going up into new high ground. It's going to have another bullish move, so on and so on. But if you chase that, you're going to lose money. You never chase the market anyway. If you're going to buy, you must wait for the principal to appear. And that principal, look, is down here, look. We saw it, look, there it is, look. And you see it often. See the stopping volume, look. Arches over, and there's the test, look. This is where you go in. You don't chase the market. That's chasing the market at these high levels. What time frame's out, Peter?
It's 20 minutes.
Oh, yeah. Well, look, okay. Let's look at the 15 minute. Well, it's not a lot of difference. Look, 15 minutes. Right? It's closing in a minute, look, soon. But that weakness is there. And when we look down the base here, there's the principal, look. This is a 15-minute chart. There's the climactic action, look, signal on it, look. Right, there's the signal.
Potential climactic action.
Yeah, look at those, read those dialog boxes. We don't hold any secrets back. There are no secrets in the stock market. Right, there are no secrets, because as I keep saying, there's too many clever people out there. And clever people back with serious money. So there are no secrets. And if you hear anybody out there telling you they've got a secret, you've got to attend their expensive seminar to find out, then you know you're being groomed for a con. Because there are no secrets. It's all out in view, look. We know what they're doing, you can see it. So there's your stopping volume. There's the high volume, look. Right, arches up on that. And then we're looking for a test. And lo and behold, there it is, look. Down it comes. Right, close on the high. It's colored black simply because it's a level bar. And the volume is clearly low. that means that the supply that was there has now disappeared. And if supply has disappeared, that must mean that demand is greater than supply. And then lo and behold, there you go, up it goes. Now, we're talking about these red arrows long. See, 50-minute chart. If you check these different time frames, there's a red arrow, look.
It says potential buying climax.
Well, that is not obviously correct, but it still shows there's some supply there. Professional money see that. In the very next bar, look, they test. And you know that that's a real test. Why? Because you've got this in the background. You've got this accumulation area here. And this might here could be caused, we can't see the volume, there's probably a bit of supply. Don't forget, some of the smart money make mistakes as well. Now the volume has to be low down there, is it, Peter?
It's not that low, no. It's
Well, it's not high anyway. But the thing is, look, down bar, red bar, narrow spread, close in the middle. Immediately after red arrow, that means it's going up. Right, and there it is. And so as soon as you see that, you know. Now here, again, look, same thing. Look, there's the ultra high volume and up bar. Markets don't like that. No demand. Floats off. Now they're marking it up for the close. So that means now that all the newspapers and television companies can say, oh yes, bullish, look, it's going to shoot up. And but you don't chase the market. You have to recognize that principle I showed you low and don't do anything until you see it. It's as simple as that. And then you're a professional trader. Now I'll just look quickly. First of all, are there any questions about this one? Right, better ask them first.
Okay, I'll read out two, Tom. One is from Sean, who says, it seems like someone is unloading positions into the close. Am I correct? And another one from David, is this a good time and position to enter a short or a little too early and we need more confirmation on Monday?
Well, they certainly unload. I know they do. Many traders like to go home, you can't blame them, with no position at all. And that means they've got to close out. And that means they probably mark it up to close it out as well. They can do that. Now, I would say it's too early yet to say rush in and short that. Because what you really want now, because the market's so cunning and devious, they may have an upthrust or some sort of trap, no demand up move. But when you see it, then you know what's going on. That's the thing. So we've got to be patient now and wait until next week. Monday, usually Monday's always a very good day because they're eager to trade and they like to test Monday just to make sure, you know, they've got it right. And but don't do anything unless you see the principle. I mean, look, please look at that principle I showed you at the bottom there. That's coming up quite frequently in all sorts of instruments.
Alan is asking, in the climactic action bar that you spoke about, the volume is relatively low. Should it not be very high?
Yes, yes. You've got to scan the horizon, to say. First of all, there is a substantial down move, look, from a distribution cap at the top. They marked it down. Now, admittedly, the high volume comes in on the previous bar. But because they're devious, is that volume, well, you know, what are they doing with it? But that's high volume, but it's on that previous bar, look. And that's what brought that signal up, look. Because relatively speaking, although the volume has dropped, right, I mean, they probably entered the market there on that bar. This is a test, look. They rammed it down and the volume is very low, or seems to be low. That assures you, or them, that their buying has taken the market, it's okay. Now when you see that, you can expect a test of some sort. But don't nail yourself down to these specific things. Look generally, when you look at it, it's pretty obvious they entered the market here on this bar here. Then they rammed it down just for a test, satisfy themselves. Now on that, the market went up, right? But that could be devious and cunning too, but you must expect a test. And there it is, look, right there, look. Now, if you learn that one today and nothing else, you will be well served in your learning how to analyze these charts. Well served. Stick that in your memory. Now, admittedly, the test may come earlier, may come a bit later, but the principle, that's what you're looking for. We don't use formulas. We don't use any mathematical formulas. That's the reason why we don't use the open. You know, we don't need to use the open, and that's why it's not shown, because we don't use formulas. We use the balance of supply and demand, which we can see. You can see that virtually in a second or so, right? And that's what drove that market up. Now it's a 15-minute chart, and there's a red signal there, right? And bang, there's a test, or even that one's a test too, that black bar, look. Okay, but the market's probably been marked up here. There's little enthusiasm. Look for the upside.
Okay, another question from Priyesh. Priyesh has got two questions here. As this one is on the chart, about this chart, I'll read this one. The volume drops off as price drops in the last few bars, showing strength. Then it seems we have absorption volume again, showing strength. Is that so?
Well, don't forget, the professionals hold the market up. What causes a bear move is there's no support from professional money, and they just let every bar fall, bang, down, down, down. But they can support the market because they know that on another wave up, they can sell more or do whatever they want to do. But that's not absorption volume. Where do you think the absorption volume is? That one.
Sorry, this one, because it's pushing up, I suppose. Maybe.
No, the volume's not high enough, is it? Volume's not high enough. The activity is not high enough. And that's weakness in the background, look. That won't disappear. They may have a crafty upthrust or something, quite likely, to mislead. They love to do this late Friday night, because then they know that action will mislead many, many traders and mislead all the experts on TV and write in newspapers and magazines. Because they, keep in mind, you probably know more than they do. That's the point you want to remember. Most of these people that write these have got no idea supply and demand, no idea at all.
Actually, personally, I've found the last half hour of the day of trading, I keep well away, because all of a sudden it gets extremely volatile and it suddenly does something, not always, but it might suddenly do something very out of character. So I tend to keep away in the last half hour like I would in the first half hour of the day as well. But Tom, there's another question here from Priyesh, the first question that appeared. He says, I have seen at times tests and no demand bars close to each other in an uptrend. What is the significance of this?
Sorry, say all that again, Rita.
I have seen at times tests and no demand bars close to each other in an uptrend. What is the significance of this?
I have to see the chart because people describe things like that, and yet when I look at it, it's all sorts of things they've missed. A test will push the market up if it's a proper test, but there's quite a lot. I can't answer a question like that because I need to see it live in front of me on the chart.
He's talking about euro-yen at the moment, 4 hour. Do you know how to put that
Well,
chart
Peter, first of all, that's a daily chart of the mini S&P, and look how those trend lines work. It's pretty certain it's going to hit that trend line.
Could Priyesh give us the code, the ticker code for euro-yen? Because we're on this 4-hour chart.
We can't do a 4-hour chart.
Right.
There's the futures contract.
Does he know the futures contract? No. E-signal.
Well, I've got the euros there, isn't it, in the finances?
Euro against the yen, though, is it? It's euro against the dollar.
Oh, I see. Yes, that's right.
Can you ask him? Shall I? Will you ask him, please?
Hi, Priyesh. It's Peter. Yeah. Do you happen to know the offhand the code for the euro-yen on e-signal? So I believe we may have that data, but I just don't know what the code is. So it's going to be in the form of something like this here, if you can see that. But I'm entirely clueless about that particular pair. But you may know the answer to that question. If you do know, type it in.
It says, I use spot on FXCM. So
Yeah, okay. We do not have that then. I'll do a bit of research just in case we have in the next few minutes and see if I can find out what the answer is.
Someone's saying I think the yen is 6Y.
Yeah. Well, let's try that then. So, 6Y. 6 4s 24. So I'm hoping this is the 4-hour bars for the euro against the yen. Oh, I've typed in something wrong there. Sorry about that. Let's try again. 6Y H F. Okay.
4 6J. Try this first. Alright, try 6J.
Okay, stand by. We're trying 6J. 6J. Now, this is a live chart, I think, or it was. Now, I'll hand you back to Rita and we can talk through which part of that chart, if indeed it's the right chart.
Prayesh, does this look like the right chart? Yeah, Prayesh. No, not like. No, it doesn't look like. Okay.
Well, of course, it's actually using a different
Hey.
instrument anyway.
Right. Philip is saying try EY#F. Oh. EY. Okay. Right, Sean is saying it is the 6JZ2 for the Forex futures according to CME. Do you want to try that?
Try it.
6JZ2. Do you need to put anything else in there, Peter? Like the hash and everything? Oh. Grigory is saying 6J is the yen dollar. We're not getting anywhere. Z2 is December. All right, we're not getting anywhere. I'll move on to this question, Tom, from Colin. Thanks for the great explanation of the accumulation base. This happened about 3 to 4 hours before the market opened, and I would normally hesitate to get in outside of market hours.
Well, I can assure you that the traders in London have a go at this mini S&P because if I'm ever up by 8 o'clock, you could see them you could see them coming in with the volume and that, or market up or down. So they are active in the Globex. And so don't worry about that. Globex, it works exactly the same, whether it's Globex or whether the S&P pits open, it doesn't matter. But sometimes it's easier in the Globex because you haven't got all these hard-nosed traders breathing down your neck. But then you see it's probably far too early for most, especially in America. You know, who's going to watch this at 2 or 3 in the morning? But there you are. That's trading. But don't ever deny Globex. It's very good. Very good. So what chart we got up now?
That's 15 minutes of the ES.
All right. So the market's closed now, is it?
Well, still fiddling about, but
Well, it's a little bit of volume has come in. Right. And we've got a signal up there too. Supply coming in. You have to assume this market is a weak market because you've got weakness. First of all, you've got quite a substantial up move during the day. You've got supply here, right? And although you've got a little bit of no demand there as it falls, it's going up. That's not really absorption volume. It's not. It's not enough volume there. But you've got to assume that weakness here now. But don't chase the market and wait. Don't try shorting these markets until you see something different. You need to see a clear up thrust or a no demand up bar. then you know you're on safe territory. But if you visualize in your mind what might happen, right, in other words, you get a gut feeling, you can almost guarantee that gut feeling is going to be wrong. Now, the trouble is, buying at these low points, right, you're sitting there, right, and the market's falling, or has been falling. The news is probably bad, right? There's no sign of any rally whatsoever. Are you mentally geared up to suddenly saying, right, recognizing the principle and perhaps going long? That's where the human failure comes in. But that has to go on, and you don't want to do that at the top of the market. Don't visualize anything until you see a clear principle. We've got those signs and weaknesses behind us there. High volume. We know supply hit the market, but also we know it's closing early, and they will want to mislead you as much as possible. That will be guaranteed. And they do that sort of thing. That's why I always say be careful of a Friday, because what they really want to do is that, first of all, they close their positions out, a lot of them, and then they want to mislead as many traders or so-called experts over the weekend, to mislead them as much as possible to make their trading easier the following week.
Try this. It's RY. Z2, someone says, and Philip says RY#F. So, yeah, RY. Hello. Yeah, two people are now settling on. We're still on this euro yen on RY#F. Right. So I can't remember now who asked the question. Was it Priyesh? Does this look like the chart to you? So I think the question, Tom, was about in an uptrend, there are no demands and tests close together. Hang on, here you are. Here's the...
I think I personally don't, it's the first time I've looked at this, I personally don't, you see, you need to specialize in an instrument and follow it closely. Professional money do. You get a weak trader who wouldn't dream of trading coffee or something, right? They specialize, so they get to know more or less what's going on automatically. And I personally need to see a chart and see it action before I can make a comment on it, because when I look at a chart, I've noticed that I look at things that other people don't seem to have noticed. But that's your learning curve, and therefore there will be an explanation, because the principles that drive these markets are definitely based on supply and demand, with the professional money marking up and down on news if possible. And that can only be temporary. If the news is, say, bad, they'll have a test or shakeout or something, right? But it'll only be temporary, because the overall market, if it's bullish, doesn't matter what news is, they may have a little shakeout, but it'll still be bullish. It won't suddenly change into something else, that's I assure you. So this is what, the yen.
It's also a 4-hour chart, bear in mind. May have some variable.
Well, if I knew where the instant was that the listener wanted to...
I could say there's these signs of weakness, and then it tests, and then there's signs of weakness and it tests.
Yeah, well, there's signs of weakness which we don't know. Right, there, that's obviously some group, right, or big traders decided to dump, right? The software's picked that up, look, right? There's the high volume. But if there could be traders still in there, there will be. If they think that's bullish, right, then let the market test. And if you see a test, especially when there's a signal on it, look, right, read these dialog boxes, please. They were re-edited by Philip Friston, who's done an excellent job. And I say we don't hold secrets. Everything we know is in the literature, books, or on the screen here. We don't have any secrets at all. But I do know one thing, a test after a red arrow like that, right, the volume's low, that means there's no selling on the downside. That means it wants to be bullish, and up it goes. Yes?
If you go scroll right to the end. That's it, yeah. Yeah, Richard says, surely that last red bar is a test in a rising market. So there's that one there. Is that a test?
Is it 20 bars?
Yeah, he's put 20 now.
Well, it certainly looks like a test, doesn't it? And it is a test, look. Whenever you see these red down bars, and they close on the high, the spread is relatively narrow, look. The volume is low. But if you specialize in this instrument, you'll get to know. You better know what's going on. As soon as you see that, you know you go long. But it's just been marked up again, because it does seem to be some correlation with the S&P 500. Now, why that is, I'm not quite sure. But it's been marked up, look. There's not a lot of enthusiasm there, though. And I would say this is weakness. And you'd expect lower prices.
AXP put up there daily. And, could you take your foot off the thingy? Oh. Thomas, we're about to try and put up AXP for you. And you, Thomas has got a question also about going up on no demand. But I'd like to make a point about this idea, this thing about going up on no demand. You the chart is trending up, and you might get no demand. But I did this with the Dow the other day, and I was thinking, well, why on earth, it's hell bent on going up and up and up and up. And of course, it's really important to look at the daily chart before you even start. If you're doing intraday chart, and the previous day was a test. So bear that in mind. So if your analysis of the previous day was a test, it means that it's highly likely that, or it is likely, never say highly, but it's likely that this day is going to be, or the next day is going to be an up day, and the power and the fuel is in the larger time frames. So, if there is a test in the daily, you want to be looking for strength the next day. So that would explain that. Tom, here's one for Thomas, who's got a question on AXP, which must be a stock. Yes, that's it. If you have no demand bars and continue to get up bars afterwards, should we just keep watch on it for when it starts going down? This AXP has been getting no demand up for the past 2 days and is up so far today. All right.
Right. Now, one thing you must remember, that This is a stock, right?
Yeah.
Okay. Now don't forget, this is a stock that makes up which index, the Dow or the... Is it the S&P 500, the Dow, the NASDAQ? Right, okay. Thank you, Philip. Now, don't forget, when you see a stock, right, there's a very clear sign of strength slap bang at the bottom there, right, after a substantial down move, look. Okay. Now, it's heading up, north, shall we say. Okay, but it's been influenced by the index. If the index is going, in other words, the tide is coming in the harbour. And although you may have a dodgy boat, it'll still go up with the tide. But that's what you look for. If you're interested in shorting a stock, you want to see a stock that's not responding to the index, and certainly if it's going up on no demand, it's going up because the rest of the market's going up. Now, it's not a good idea to ask too many questions, try to figure all this stuff out. You need to believe the chart. But don't forget, you're trading in harmony with the parent index. And if you look at the parent index, it's going up. Then, of course, your stock will be going up. Even if it's weak, it's been pushed up or lifted up. And in this case, it's going up on what looks like no demand. But don't forget, you've got quite a strong buy signal right slap bang in the bottom here.
Test after shakeout.
Yeah. So you've got that right behind you, look.
And it's called American Express, apparently. It's American Express.
Oh, this is American Express.
Yeah, according to Eleni, yes.
Oh, wow. They are. Can't get bigger. It would definitely respond, American Express, to moves in the main parent index. And that's what's happening, look. It's even gapped up there. That's usually not a good sign when they gap it up. If this is going up on no demand, there is a bit of high volume there, which is supply, and then no demand. So this is going up with the index, right? But there's a supply here. And you've got supply in that bar, and no wonder you've got some no demand on that bar. Professional money have seen that. And although it's been marked up because the index is strong, they're not participating. That's a weak-looking stock. But don't forget, you've got this behind you. That's interesting. And look at the weakness way at the top there, on the left here. So, look, you've got definitely high volume and up bars, look, which market doesn't like high volume and up bars. Yeah. Then you get your crafty up move, look. Similar to probably what you're seeing now. They pull the plug, they don't support it, off it goes. And whenever you see this as well, look, that's a sign of weakness. When you get these blue up bars like that, close in the middle, the volume's less than the previous bars, that's weakness too. Comes down, right, this would be some sort of shakeout. Seen in the Dow, it's going up with the Dow, look. But there's supply here, look. There's supply there, no wonder it's going up on no demand there. If you're a professional trader, you'll spot that immediately. There was supply in that bar, or that day. Therefore, it's been marked up, because it's easy to mark it up when the parent index is going up. But you're not going to participate, and that will result in no demand. But you often see that. You see an up bar and no demand, and even next bar, the professional money have seen that. Next bar's up as well. They encourage the markup to catch more and more traders as much as possible. The whole thing revolves around misleading as many traders as possible. That's why you can't go on so-called gut feeling or anything. And I've never heard anything on TV or newspapers that would tell you what we're telling you. Never.
Okay, Sean would like you to take a look at silver. Oh, we're just updating it as well.
When I updated it.
Oh, silver.
Is that silver?
Yeah, it's not updating for some reason. It's not updating there, so let's go on here. Just silver?
We're just just trying it on here. Ah,
There you go.
should you put? Do you want, silver.
SLV derivative.
Right, is this chart okay for you? Well, again, look, right at the bottom here, you've definitely got stopping volume, look. This is stopping volume, look. All right, responds immediately to it, and there's your test. Now you see how they still test, look, but it comes in various intensities. Sometimes it might be over here, sometimes it's there. I've seen a test on the very next bar on some instruments. But there's your test, that's why it's gone up, look. So it goes up. That's another test, look, volume's low. Right. It's gapped up here for some reason. I don't follow silver, but it appears to be running out of demand, doesn't it? Up here, look. All I can say to you is you can't chase this. If you're already in there, bought at that low principle that we can clearly see, then you've have done okay for yourself. But don't forget, once you learn to read these charts, your skill as a trader then kicks in. And you see, not only have you got to learn to read the charts, unfortunately, but you've got to overcome you personally. Now, you see, when these markets have fallen and the news is bad, right, even though a signal of strength may have come in, are you ready mentally? Do you sit up and say, wow? You know, most traders don't. They think, oh, yeah, we'll see what happens. We'll wait. And they get these wide spreads up, look, gotcha bars. And they say, oh, well, I've missed that now. And it goes on. So that's part of your skill as a trader. You've got to see the principle, believe in it. So here, sorry, Rita, you were saying? So here, look, you've definitely got your stopping volume. Now you know we're looking for a test, and that is a test, look. Down bar, close on the high. Volume is fairly high, look, but it's still lower than the previous bars. So it means that supply that was here, most of it's disappeared. And that's what takes it up. And that whenever you see that too, that's a test, look.
Just saying to Peter, this might be a silly question, but he says there's no such thing as a silly question. But this bar here, Tom, is it? Am I seeing things? Could it be a test? Because most of the bar is below the close of the previous bar, and the volume is. Could it be a test? Yeah.
Yeah, it certainly looks like a test. It looks like a test, but at these high levels, you have to be wary because it might be what we call a fail test. However, the next bar has gone up on the back of that test, look, that Rita's just queried. So it is going up. But you can't chase the market at these high levels. You've got to learn the principles, which we've shown you on the base, the bottom, or a test the rising market. Then you get on board and you're not under pressure. But if you start trying to chase the market at these high levels, the way the market works, it's cunning, it's devious, it's almost certain to go against you one way or another, and you're under pressure. And it's a human being. I mean, anytime you make a bad trade, I could guarantee if you look back carefully, there's things there that you've missed. I'd almost guarantee it. I know I've done it in the past myself.
Sean, we can't put a 15-minute chart up. Is that correct, Peter, on silver? Yeah, we don't have the data for it, I'm afraid. But I'm just going to go over to end of day. End of day. And, hang on. This is our daily chart, Tom. Oh. Oh, hang on. So we're just updating it. This is the... We're just trying to update it. Because I just thought this would be the best one to show, because it's the one we use for the newsletter, and it's got the trend channel and everything. That it's not up to date. Oh, so can we put it? We'll just put the daily for the Dow. Anyway, whatever. No, not. Sorry. Where is it? Right. Oh yes. No, that's a good one. Sorry, it's me being unhelpful. Yeah, this is the one we use. Right. So I think this will be our last question because we've run out of time, from Craig on the S&P, and it's a good question actually to end with. On the S&P, with weakness observed towards the end of the session, plus the fact that we now seem to be at the top of the daily downward trend channel, would you expect a decline would be likely?
Well, I would say that a decline is far more likely than to shoot up. But because the market is devious cunning, they may have an upthrust where they push it up through that top trend line. And if you see now a classic looking supply overcoming demand, right, then you can almost say definitely it's coming off. But they're devious, they're cunning. That's how the market works. It has to work that way because you have to have more losers than winners for this to work. If everybody was a winner, you'd just get a sort of moving average line. You wouldn't see any variation. Professional money have to have movement so they can make money. They have to have these violent ups and downs, and they will do all in their power to mislead you, believe me. Definitely. I know that, definitely. So you've got to be... That's why you can't trust your own feelings, because you can't help absorbing all this news and the guy over the road talking and the broker talking and this and that. You can't help absorb it. And then you're forming a sort of feeling, a gut feeling, and you can bet your bottom dollar that's wrong. It's a human being. You learn to read the charts, and then your skill as a trader kicks in. But that's part of your skill as a trader, is to handle your own feelings and to override really what the body's telling you and look at the facts on the screen. It's quite interesting, really. It's a very interesting subject to look at. I mean, for example, you get two traders, right, that are fairly inexperienced. Say, right, one goes long, one goes short. Now, somebody's got to make money. But it's quite possible they'll both lose. So that tells you a story now, doesn't it? But anyway, I believe we... Sorry about that. Right. Right. Anyway, thank you very, very much for listening. And it's been lovely talking to you. And but stick that in your mind, that base at the bottom there. And if you can stick that in your mind, and if you ever see that again, you know the market's going up. And it happens very, very frequently. Now, I'll be doing a newsletter tomorrow, is it, Rita?
Yes.
Rita says yes. So Saturday it should be up there definitely by Sunday. And people seem to like to read it. And if there's any special question you want, ask in the VSA forum and we'll answer it.
Welcome to GoToWebinar, events made easy.
Sorry for that delay. Yes, we realised that we hadn't said goodbye. So goodbye, everyone. Have a lovely weekend, and we'll be newsletter Saturday, and we won't be back next Friday. Tom is not around next Friday. There won't be a Friday webinar from Tom, but there will be the following week. Okay, and but we will have the newsletter each weekend. It's just the Friday that Tom can't do. Okay, bye-bye, everyone.
Welcome to GoToWebinar, web events made easy.